I thought we might take advantage of the stellar cast, as Ryan said, to take a little deeper dive into what is going to be the catalysts and the requirements for the expansion and continued development of the security token. I think we all understand what it is and where, or possibly where it is and where it's going, and that the asset, the tokenization of assets is akin to the democratization of investment opportunities globally. So, which is a fantastic result of all of our work over the past several years. You being the longest tenured of this panel, as evidenced by the lack of hair. I'm close behind. So I want to engage with everybody here, and everyone has had their main things being done. Marina did one of the first token, or securitized tokens in fund form, blockchain capital. Joey, an esteemed lawyer here, and understands all the regulatory side and knows where this is going. Olga has her different views, and has her own company that's engaging all these things and the specialties, and of course Simon. So I'm going to start with Marina at the far end. What are the catalysts and things that are going to require to be developed for the expansion of this market of security tokens?
Well, I would say two main things. First one, maybe if governments and regulators just give more clarity on how they think about those instruments, right? So when we do kind of security token offerings now, some of the legal firms would come up with a very long list of jurisdictions that they simply exclude just because they have done their work and they feel that in those jurisdictions these offerings just do not work, right? Some other firms take a little bit more different approach and they think that this is doable. So that clarity from regulators, I think, would definitely be helpful. Sorry, I lost my thought about the second point. It'll go back to me.
Are you talking about specific regulators, or are you talking about general regulation with respect to the existing securities laws as they apply? Because again, we're looking at, we keep saying this, keep coming back to this, that this is a global framework, a global investment framework that is hamstrung by jurisdictional regulation. So are you trying to suggest now that that the existing securities laws that we would comply with when issuing a security token in various jurisdictions have to be somewhat harmonized, or where are you going with that?
Well, the best thing would be if more and more regulators implement things like Jobs Act in the US, right? And even Jobs Act in the US, I think, would be very worth, I guess, maybe introducing some further exemptions that are in line with this market, right? Exactly as you said, as of now, we just have to apply the existing framework of securities laws, which is not necessarily up to date with what is happening in this market. Mm-hmm. So, legal firms do best trying to structure the instrument that work with those securities laws. But I wish that regulators are also a little bit more supportive in terms of either providing very clear guidance as to how those should be done, or perhaps even introducing further exemptions for specific offerings.
All right. So we can get to whether that's even possible or even realistic as we get through here. One might argue either. Joey, what are your thoughts here?
It's a difficult one. I mean, I'm going to take maybe a very slightly different approach. I mean, I think someone made a comment yesterday. The starting point for most regulators or regulatory authorities in the world is to take the path of least resistance, which is always to apply existing frameworks as they exist today to new technology. So it's a difficult one. Everyone talks about the security framework. There's an obvious demand and an obvious requirement for that to exist to facilitate this industry. But at the same time, not everyone seems to focus a lot on the sales part of the actual security token. So dealing with the credit investor Reg D, Reg A, Reg S options in the US for investment contracts, etc. Not a lot of people think and talk about the actual operational part that sits behind that, right? So the custody, well, it doesn't just affect the sale. Arrangement of transactions, there are lots of financial promotion rules, there are lots of custody rules, there are lots of rights that attach to securities that people are not always that familiar with. They're very focused on the sales part. So personally, I mean, I'd like to see, this industry more recognized, or these specific tokens more recognized as a separate asset class and dealt with slightly differently and specifically.
Yeah, there were some specific things mentioned both this morning and yesterday. I think Vinny mentioned something about just the actual physical asset itself, and how do you bridge the legal gap between smart contract and the physical and stuff. So I think there's a lot of things that have to happen. Olga, please, yours.
Well, overall, I think, the regulator around the world will have a very challenging task now to figure out, how they can enable this innovation and enable more capital formation in this innovative space, right? Not through venture, not through intermediaries, but directly coming from consumer, right? And basically, it's kind of like the question, we are talking about investor protection and consumer protection, but come on, guys, over the years, the system became actually much more insider protection, Wall Street protection, protecting their interest. If you think about how IPO works today, right? You as an investor, you're at the very end of the Perkin order, right? So first there is this placement, a private placement, and Goldman Sachs, and and all these guys get access, right? And by the time they are done and they sold, this is where you as a consumer comes into play. So now with ICO, what I'm particularly excited about, we see the reverse order, or the reverse pecking order. Anybody from China, any small guy, can invest alongside Anderson and all these big guys, right? And be part of this opportunity. We never had this before. So that's amazing, right? And I think, smaller governments will be more proactive and more flexible in how they approach this challenge, right? This is why we are all here. This is why Gibraltar, this is why Switzerland, this is why Malta, right? And Liechtenstein also working on. And I think bigger governments, they don't have such a big urge or need to chase this opportunity.
Well, again, you're looking at the difference between the issuer side and where it's being issued from, and we've come back to this several times, and the buy side and where that's going. So yes. So, buyers are not always sitting in Gibraltar or Singapore or Switzerland or whatever, but there are some, obviously. But on the buy side, you have another thing. Simon, be interested in your views here.
Well, I'd say I don't think the securities token market is going to do the same as the utility token market. You talked about separating those asset classes. They are really separate asset classes. Securities tokens are not going to democratize investing. I know that because we've been trying to do that since 2010, and we had to go to high net worth as the only global model that could work. And retail investors already have securities laws, which is you either be a public company or you be private, and if you're private, you can only work with high net worth. If you're public, then you can work with retail, but you have to do all the same disclosures that cost the same amount of money. None of that changes by tokenizing. What does change is the currency by which it's traded against. So you could have liquidity for the high net worth market in the private market. But will the securities token democratize investing? I don't think it will. I think it would just create a better investment for people that have been investing in illiquid assets. And utility tokens will democratize investing. And if the US says that these are all securities, then everyone will stop allowing the US to purchase them. Because in Hong Kong, the definition of a security is you're either an equity, you're a debenture, you're debt, or you're a collective investment scheme, and if you're not a security. And many different places around the world have very similar things. So you got to look at the way that we're going to democratize investing is going to be hardware wallet to hardware wallet, utility token to utility token, global markets in things that aren't securities. That's going to democratize the market.
Right. So by saying the currency changes, you're saying that, okay, you can buy exposure to a real estate portfolio in Johannesburg, but I don't necessarily have to sell that if I want to sell that into rand or into dollars. I can sell that into any other crypto that I choose to sell it in, presuming that there's a market for that. But I don't have to ever come back to fiat. Is that what you're saying? But by changing this,
that's one thing. That's one thing. But then, if you want to go to fiat, you then take the off ramps from Bitcoin or crypto and go to the stable coin or the currency that you want.
Right.
Based upon the traditional off ramps and same thing.
Okay. Why is that beneficial?
That's beneficial because of firstly, not creating siloed monopolies in certain jurisdictions by achieving that through the currency that it's actually traded against. So if there's capital controls in China, then you can only get $50,000 US, and therefore if you've got $50,000 US, if you need to have dollars in order to invest in that asset class, then you can't do that.
So you mentioned capital controls in China. So that then begs the potential. Then if I invest in something, an asset in China, and then some law comes out hence that says, okay, you can't transfer that, or you can't, sell it into local currency and then take the local currency out. The fact that it's tokenized and the fact that I can transact it with somebody else outside of that country for a currency that's outside that country, then I've effectively gotten around those laws. Is that what you're saying?
Well, you might temporarily get around those laws, but governments are not going to allow you to carry on around those laws. They're going to define their policies.
But if I'm transacting offshore to offshore on a peer-to-peer basis in a currency that isn't theirs, then obviously I've done that.
Yeah, and that's why utility is a democratization. The securities regulated side is just going to create more liquidity.
Okay, Olga, you have something to say here.
Yeah.
Or Joe,
well, it's kind of like I'm always laughing about this one. This is actually what we've had in Switzerland for 100 years, right? This offshore banking model, right, where just people from all around the world bring their money to protect their wealth and grow it, right? And many people think, oh, it's just all about tax evasion. No, it's not, For most people in emerging markets, it's just about safety and protection, and they don't care about taxes. If there would be a legitimate way to pay taxes on their wealth in Switzerland, they would do it, And I think this is where blockchain is really, really powerful, because for the first time in human history, we will probably be able to create something that gives you protection without giving you opportunity for tax evasion. Think about putting all the assets of the Swiss banks on the blockchain, and then you can say, well, the source country X, Indonesia, you can run a node on our permission blockchain, and you can see the transactions of your citizens. You cannot see their names, right? But you can see how much they have on our Swiss banks, right? Mm-hmm. And we can pay you taxes, like pauschals and some general tax, 20% goes just off to you. We had this kind of agreement now with European Union, right? So if you're a citizen of European Union and you have money with Swiss banks, the taxes are withdrawn at the end of the year automatically, but the source country does not know where is it coming from, right? Mm-hmm. And this is just one example. And I think what Simon is talking about, and what I'm absolutely also excited about, is that we had this, opportunity of borderless capital for only rich guys before, right? If you're rich, you can have your shell companies, you can bring capital out, you can invest in great companies. But this is like if you're 5 million plus, if you're a customer of, Credit Suisse or UBS, and what Bitcoin and cryptocurrencies are changing, they're given the same to all of us. If all your wealth is a half Bitcoin, you can still move your money in a global way.
Only
right?
if regulators allow retail investors to invest in security tokens. Otherwise, it's the same thing, which they're not going to do.
Sorry to jump in, but you're absolutely right. I mean, you use the term democratization, and that's the critical point. What we're seeing at the moment is a lot of regulators towards the application of securities frameworks to everything. Let's just play it safe and apply that. Mm-hmm. Now, if you're dealing with an accredited investor regime in the US or a qualified investor regime in the UK or whatever it might be, it's very difficult. You're centralizing the type of people that can gain exposure to this to an accredited investor group. Now, 50 years ago, having $1 million in the bank and gaining exposure to a risky new investment, that was the safe way of doing it. Today, I could find many 18-year-old guys that can make a more accurate and effective investment decision for £500 in a particular token than a $1 million investor. So understanding that, and the way that we're trying to direct things is to create, call it the pieces of the securities frameworks relating to disclosure, relating to transparency, applying those key principles to a new utility token framework, rather than saying, everything applies in its entirety.
Well, we have to. I think it's incumbent upon us to take a bit of a perspective on this too. Is that the securities laws, because good or bad, as they might be with respect to, democratization, and also the way that it has developed within investment banks. Because I used to run a derivatives group at an investment bank, and Marina's worked at investment banks and things like that. How those things have developed and the sales processes have developed aren't regulatory. Those are just basically ease. So perhaps we circle right back to how this gets developed and how it expands into something that is more available to everyone. So perhaps that ease of sale and the methodology of those sales is something that if we make it simple, make it easy for everyone to look at and review and allow the access to that, then we've accomplished something. It's not going to happen tomorrow, I don't think. Tomorrow's Saturday.
I think regulators have been trying to solve that for many years, and it didn't require blockchain to come along and look at that problem.
No, right, exactly right. All it requires is a little bit of, well, firstly, to sell to individuals that are buying $200 at a crack. I can't say that word. It's a bloody lot of work. Because the traditional sales process is man-to-man, telephone, this kind of stuff. Now we have this online process. You built one. I built one. This is all happening. So now the ability to transmit that. Marina did the same thing. Perhaps you can talk about that. The ability to transmit that information and the opportunity must be one of those things that helps advance and widen the investor network. Perhaps I'm wrong. Please tell me if I am.
No, I definitely agree. And I think, Olga, you had a very good slide in your presentation about so many parties are involved in that securities process now, but actually, and that again, historically, that just was how things worked. But that's not necessarily that's the most optimal way to do it. And I think the fact that we started with utility token, the fact that we started that disruption there, a lot of the kind of better practices that were generated there can be transferred in security token space. At least, some of the intermediaries would go into the past. Maybe they're not needed anymore. But that still obviously would be subject to securities law. I think the disruption of intermediaries, the fact that we will be bringing previously illiquid asset classes to this space, the liquidity, even if there's still not going to be enough investors, retail investors investing just because they're limited by the securities laws. I think that those two things alone already would change that landscape very significantly.
Yes, and if I may pick up, Greg, on your point, I spent a lot of time thinking about exactly that, right? Because when those laws and regulatory frameworks were created, some 40, 30 years ago, right? It was a pretty different world. Now we have internet and access to information changed the way how people deal with investments and access. Mm-hmm. And just think about one thing. Why we are talking about all the security offerings and how this is different from ICO. At the end of the day, it's all about public solicitation, right? So if I want to do advertisement in Japan that I'm selling my utility token in Japan publicly, I want to put there advertisement and talk to people, to retail investors. Mm-hmm. This is what I'm not allowed to do, right?
Right.
But look, guys, maybe we don't need it, right? Look how Swiss offshore banking works. You're onboarded into UBS, right? You're not Swiss, you're from somewhere else, right? And this Swiss bank is selling you the same Japanese or Gibraltar or whatever, all those other securities, right? They're allowed to do it because you are their client, right? So think about it, and well, so they can advertise to you because they onboarded you because they have a banking license, and we, like, you know, TokenMarket, all these platforms, well, we don't have a banking license yet. So this is why we're not allowed to advertise those investment opportunities. Yeah. Well, okay, we will get there.
Yeah.
I think just to, I mean, it's a very natural evolution, I think, of the space. But I mean, some people, and I sound sort of negative, it's very attractive. When you start to trigger security law requirements, you know, other than what everyone understands, you know, you're entering into an entire new universe of suitability testing and requirements, and also ownership and control, transferability. If you have a token that represents equity in a business, you can't just securitize that in some ERC20 token and make it freely transferable around the globe instantly to anyone at any price over any market. There are lots of responsibilities for the company to understand who its interests are delegated to and held by, and who's arranging that transaction, who's advising on it, who's testing, who the receiver is. And there's a lot of, so those networks, frameworks, platforms, exchanges, hopefully are going to tick the solutions. But today, when someone says, I want to do that today, you know, they have to understand that the attractions of the liquidity that theoretically exists in this world could be very, very restricted or non-existent. Look at the practical examples of tokenized funds in the past, Blockchain Capital, Spice VC, all of these guys. There are very hefty restrictions built into those prospectuses as to deal with a transfer, penalties, 80% value you can lose on a transfer that hasn't been recorded and approved, etc. So people need to understand, sometimes people think about the utility token universe, they see the world and they think, well, let's just tick some securities boxes, do a private sale, and then we have the entire universe to deal with.
There's several other things that are, that revolve around securities and the transference of a security that we haven't even talked about. Pavel mentioned that the ERC20 token or whatever may or may not be useful for that, and you may have to go into a permission exchange. And there's probably several other things that have yet to be fully investigated by most people as to what some of the barriers might be.
Yeah.
Whether those will be solved, I don't think it's a question that it'll be solved. It's a question of how. Simon, you've been through this iteration several times with the platforms that you've put together and things like that, and the regulated dealer that you have in the States. What say you on that?
Which particular part?
Anyone. Go ahead. Just don't speak for 20 minutes.
Okay, all right. Well, what are we trying to do here? So, look, we've seen the power of what happens with utility tokens. We've seen the world wants to participate in something when they can see that there's an opportunity to speculate. The question is that utility market that we saw started in 2014 and peaked in 2017 and still continues today, did we get more fraud, scams and problems there than we did in the regulated market? And I'm not sure what the answer to that is. I think we had just as many scams, fraud, Ponzi schemes and problems in the regulated market.
In a bigger scale.
As we did in the unregulated market. So it's calling into question. We've got those two examples to look at. And unfortunately, it's a bit of a useless question because we're not going to suddenly, around the world, just suddenly say, okay, regulations doesn't work. That ain't going to happen. If you're thinking that suddenly governments are going to not care about money laundering, not care about terrorism finance, and even though none of us are detecting any money laundering or terrorist financing, because none of those are using these mechanisms, we really aren't detecting any of it. We're all just ticking boxes.
Well, what's interesting about that, if I might interrupt, is that most regulators, actually, I shouldn't say most, I should say the ones that I'm familiar with most are the Ontario Securities Commission and the SEC. And they see, from the traditional securities issuance, they see serial fraudsters, the same guy coming through time and time and time again, doing securities, selling, pump and dump schemes or whatever like that, nothing to do with a token or anything else like that, but they're doing it over and over and over. And they watch them and they find them and then they haul them, and they haul them up in front and they whack him on the knuckles and then he goes back and, serves his penance and then does it again.
So it's interesting.
So where's our bad actor stuff that we always talk about trying to get rid of these people?
Well, we have our fair share of fraud and scams. We had BitConnect, we had OneCoin, we had all sorts of stuff. But it's interesting to ask, does Telegram, Reddit do a better job of regulating the industry than the regulators? I'm not sure there's a clear answer to that. I'm not sure if that's
Why would it
actually
do that?
clear. Why would it?
Yeah, you have a reason to think that. Or
I'll tell you why. Because
why would that be?
We had an experiment where all of these things were essentially ignoring securities laws for 3 years. And did Reddit, Telegram detect more bad actors by people all calling out scams?
Right. So the community is doing this for itself, is what you're saying.
Did the community regulate it better than what happened under the guise of this is all authorized, this is regulated? I'm not sure I've got the answer to that. It's an interesting debate. That's why I want to see the two go. I don't want to see everything turn into securities tokens. The utility token market is important because I want to see the answer to that.
No, I think the community is right. I think you're absolutely right in the sense that you have that. Olga, please.
And it's part of the bigger trend, right? Everybody is sick and tired of big governments, big organizations, institutions, right? What we want is freedom of choice, professional freedom.
Yeah, but hang on a sec, though. Just because we're tired of this or tired of that, I'm tired of lots of things, but I can't change them. But there are incentives and there's reasons and there's things that occur, right, that just naturally form. So just because I'm tired of something doesn't say I'm going to change it. But the fact that the world is adding to this. I'm sorry.
Everybody's tired, but also there are so many people, how many are self-employed today in the US in comparison to 20 years ago? So this, wish of people to be, self-driven, professional, this is why we are talking about community. Because today, I live in Zurich, in Zug, and there are so many excellent people, bankers, but they don't want to work for a bank anymore. Why don't those people come to your platform, to my platform, engage there, rate the investment opportunity, write investment reviews, give up predictions about performance. It's all recorded on the blockchain. It's transparent. This is what Pavel was talking about. I liked it. It's all about transparency and auditability, right? So we can create a track record of financial professionals in decentralized manner. They don't have to be part of the bank, being part of this analyst, reporting entity that are writing reports and get paid monthly salary. They can be self-driven, independent, contributors.
Well, the larger organizations were the ones that own the networks of clients. You mentioned that before. You onboarded to a client and they own the network. Now, with the ability to be online and link up, we all own the network. It's not just it's not owned by the banks anymore. Yes. And they're struggling. The investment banking side and this kind of stuff is struggling for that. But that's another matter. Joey, you had a comment.
No, I was just saying. I'm talking about security tokens, etc. We talked about democratization, recognizing the differences. There has to be a regulatory-driven initiative to recognize this new asset class. There has to be. What we're seeing at the moment, definitely in practices, even people who are dealing with something that could or should be classified as a form of utility or consumer token, etc. There are lots of best practice guidelines issued by Brooklyn Project and lots of other great initiatives. Everyone is operating now within securities exemptions or trying to operate within securities exemption, prospectus directive exemptions, various exemptions that exist in different jurisdictions, raising huge amounts of money. Is that more protective for this industry? I'm not sure that it is. If you sell something within a security exemption, you are recognizing that it is a security. So it's, we've heard the arguments about SAFT-driven initiatives and that things developed by the SAFT may ultimately be determined to be securities themselves. All of these evolving, there are lots of complexities that are evolving on almost a day-to-day basis, which are, we need to just build something that is specific for this and stop trying to fixate it into existing regimes.
Simon's dying to speak.
Yeah, no. I've another thing. My observation as well is it's easy to think that regulators are inflicting all this stuff upon us, but my experience actually shows that consumers demand regulators to do all this stuff. During the boom, everyone was like, "Hey, I'm able to invest in these ICOs. Leave me alone. How dare you say I can't invest?" But then you invest in Tezos, and everyone starts actually saying, "How did the SEC allow this to happen? How could you dare?" And all regulations are always the person that got scammed running to the regulator, trying to get their money back, and enforcing regulators to never allow that to happen again.
Because they were stupid.
So I can't tell you how many die-hard anti-government Bitcoiners suddenly become, crying and run into the government as soon as they lose their money. There's a lot of those, particularly in the retail side.
So they want freedom, but they want to be protected from themselves.
Yeah, I don't see many high net worth people do that, just general observations. I see a lot of retail people do that.
Sure.
Yeah, that's absolutely right. I mean, the Tezos, I think it's all public. I mean, it was one Bitcoin investor in Tezos that started that raft of litigation against Tezos.
Well, and he was and he was very likely supported by an ambulance-chasing law firm in the United States trying to get someone to start a class action.
But I think what's interesting is if you had appropriate frameworks, and what we are seeing with some initiatives is 30-page questionnaires for a utility token sale, where they have to demonstrate that they're actually suitable, that they actually understand what they're acquiring. We see lock-in provisions that don't allow the token to become transferable until they've used it on the actual platform. So there are lots of things that can be done to deal with these issues specifically and move away from the absolute pure speculative how is this being sold, who is it being sold to. All of these things can be considered and they're being flagged by regulators, but dealing with those issues directly is probably more suitable than saying, let's just, put everything in the universe into the securities world. Which, by the way, I still encourage. I still think the securities token platform will evolve absolutely, and there are lots of tokens that are absolutely should be operating within not just securities laws, collective investment law, but lots of relative frameworks. But that seems to be taking time, and the actual support for that legal infrastructure doesn't really exist today. That's the issue.
Well, you have that basic framework, and then you have aftermarket and liquidity and exchanges and this kind of stuff, which everyone's trying to solve, or everyone thinks they're hoping to try to solve over time. Marina, do you have any comments on? I'd be interested in the largest difficulty that you had with respect to marketing and selling the blockchain capital transaction back in the day. A whole year and a bit ago. What was the biggest challenge?
The biggest challenge back then, it was actually a reasonably easy sell, but specifically for US investors, we had to enforce a 1-year lockup because it was a Regulation D. And again, that's, I think, a very similar thing that I'm seeing with again, US offerings, even for utility tokens that are offered as securities, that most investors are much more, again, liquidity focused. But given we have to rely on the exemptions that are mainly for private placement type securities, those comes with the longer lockups, right? And so that's something that they say more for retail market is not really prepared for, especially I would say in Asia. Asia is much more driven by, again, immediate liquidity. Again, VC investors, they are used to that, so that's not really a problem for them. But yes, so I would say that's the fact that the lockups were in place for, say, US investors specifically. And then that was really, really early days for security tokens because there was no really any kind of framework of how to think where they should trade. But I think over the last few months, there was also lack of trading venues that can trade those security tokens. And it's great to see that infrastructure finally developing, lots of really smart people working on various aspects of that, be it, again, a security token exchange, be it an issuance platform that allows to, hopefully solve some of those, transfer restrictions to do with tokens. So from that perspective, versus a year ago, I think we are very, very advanced in that whole space.
That's true. I remember all of us with Ransu, we were at this panel a year ago in London, right, where one of the first talks about utility tokens, security tokens. I think where we were a year ago, this is feels more like 5 years, within 1 year. Yeah. And I think the way forward is still about security tokens. And I think, I really liked your point, Simon, about that we are not going to replicate, New York Stock Exchange and London Stock Exchange. This whole thing doesn't make sense anymore. And I think this is why we are all here, people like you, me, like Ranzo, because now it's up to us to think about how we can put our forces together and create something truly global, truly accessible, within the legal framework, but done in a completely different way than traditional finance. Maybe it's more about self-imposed self-regulation standards on listings. Maybe it's more about whitelisting the accredited investors with the wallets on a global scale and sharing this, database and those clients, right, and enabling this global liquidity within the accredited investors. There are so many ways we can approach and do it, but I think it's just through alliances and partnerships. And it's not through some people, they go, and I'm gonna apply for license in Singapore and in London and in US. I think it's overkill. Those things are so complex, so resource intensive. I will be super happy if we just get this done in Switzerland and in Liechtenstein. I have no inspiration to do the same stuff in US and in Asia. Because in US there are great people doing it. Because in UK, in Gibraltar, there are other great people doing that. And I think it's more about, alliance and partnerships and agreement. Those are the standards. If it's good enough for me, it's good enough for you. We do joint listings. This is the way forward. I think. What's guys?
I'm being signaled by Ryan over there that he's hungry, and I believe it's lunchtime. So, unless there's any burning comments in anyone's head, Simon, anything?
I think we covered it. I think it is important that this is going to be, I guess, more decentralized, and that there's going to be a lot more centralized players, if that makes sense. And there's also going to be a decentralized element that's going to happen whether we like it or not, no matter what we try and do, and that's going to happen.
Right. Okay, with that, thanks very much.
Thank you, guys.